Itself, Uber shares getting slammed in the after hours, down nearly 10% because it came up short on revenue and gross bookings. Losses were also worse than expected at $4.72 a share. However, adjusted EBITDA was better than expected, $646 million loss versus $970 million loss expected. Get this, though, revenue, it grew just 14% year over year, short of the street's expectation and far short of that 72% revenue growth that we saw from Lyft yesterday in the quarter. Uber reporting $3.17 billion versus $3.36 billion in revenue that was estimated. Gross bookings also looking a little light here, $15.76 billion versus $15.82 billion expected. CEO Dara Khosrowshahi echoing what Lyft said yesterday, though, talking about an improving competitive environment in ride-sharing. But remember, Uber Eats makes up a large part of that core platform, and he noted that food delivery, that environment remains tough. Also, regarding profitability, and this is essential, key for markets why you're seeing the stock get hit right now. Here's what he told us. He said, I'm going to quote him here. He said, we think that 2019 will be our peak investment year, and we think that 2020, 2021, you'll see losses come down. I think our break even is something that we can push the company to break even if we really wanted to, frankly. He also said, no doubt in my mind that the business will eventually be a break-even and profitable business. So eventual profitability, guys, that's what he's saying, but certainly not as clear or as certain as what we heard from Lyft's executives yesterday, who told investors that last year was peak losses. We'll see if he's a bit more clear on the call, but certainly investors are going to want to hear more. Back to you.
Yeah, that's a shortfall, and that's a huge move. Deirdre, thank you. Uber down 11, and look at that sharp drop, Mike.
Yeah, obviously, this is a company that has not built up really a lot of goodwill or, really gotten the benefit of the doubt or earned it from the street. So obviously, it's got to reprice lower, see if there's another crop of long-term true believers in the big picture story that can buy it up here. But it doesn't do anything to counter that impression that, in fact, maybe they waited too long to come public.
I'd say as well that Lyft is down a couple of percent. Lyft was up a couple of percent in the session. So interesting to see Lyft give up its gains despite the fact, Mike, that they have outperformed this quarter. This looks like a more Uber-specific problem than a Lyft-specific
Obviously
problem.
A reflex move. You don't know if it's going to be the lasting reaction. But clearly, just the idea that this was a very long runway growth story for both companies is being challenged.